And action?
Yes.
Okay, guys, how y'all doing? Okay, it is July 14th, 2019. My name's Malcolm Mundy. We're doing astrology and stock market cycles. This will probably be a very important session for anyone who's investing in the market because we are going to talk about comparisons of today with the late 1920s and the late 1980s. So we could be heading for something very interesting. And one of the most important things, though, that you have to understand is that market psychology and mass psychology that affects the market is the most important thing, not astrology. Astrology, the stars impel, they do not compel. And the problem with a lot of people who follow astrology models is they think, this astrology cycle says this, so I'm going to buy and sell. It's like, well, look at what everyone else is doing. Look at what mass psychology is doing. Because if the mass psychology doesn't work with the psychology, it's not going to work too well for you in the field of investing. But cycles in astrology can help you, especially if they're working together in sync. You can get some possibly very profitable results, in my opinion. Okay, so we go to page 2. Reality. Are you putting it on hold, or are you still going?
No, we're just discussing technical issues.
Okay. Reality. Markets are run by mass psychology of the buyers and sellers. Hence, for one to be profitable in the stock market, understanding mass psychology and the masses are paramount. And astrology may play a role in affecting such mass psychology. Okay? So here are my 4 reality rules regarding the stock market. Am I talking too loud?
It's really loud. Are you sure?
Okay.
Well, we're back here.
Yeah.
I mean,
Oh, so they
It's
didn't
like
use that.
blasting through the things.
Okay, sorry. Okay, reality rule number 1. There is nothing logical about actions involving the stock market or the Federal Reserve. This is because if there was, then anyone could make money off of both. Reality rule number 2. It's a big club and you ain't in it.
Yeah.
Understanding this reality means understanding that the main goal of this big club is to sell at you at the highest price possible and then buy back from you at the lowest price possible. Reality rule number 3, there is no such thing as a free market. The stock market is fixed, but not in a blatant and open manner. It is fixed in a surreal way that involves mainstream media hype and so-called stock market experts touting advice based on logic. Reality rule number 4. For 2016, 66% of money managers failed to beat the S&P 500 in terms of investment return. And for the past 15 years, 92% failed to meet stock price targets. Hence, it is better to buy the market than to buy individual stocks. There are stocks that do represent the market, though. If you want to buy, say, the Dow Jones Industrial Average, there is a stock called Diamond. Symbol is DIA. It represents the Dow Jones Industrial Average. There is also, if you're interested in, say, the S&P 500, it's called Spiders, and it's SPY. If you want to invest in the NASDAQ and put more risk on your head, there is QQQ. Okay? Now we come to the next cycle. This is the most accurate cycle in the stock market. This is how the big club takes money out of your pocket. First of all, they try to put you in a cycle where your bartender talks about how well their 401k is doing. The person who does your nails is talking about how great their Apple stock is doing, or her husband's Apple stock. Or you might hear about how great Facebook is doing. You know, God, I own Facebook and I'm making so much money. My wife thinks I'm a genius. Blah, blah, blah. When you start to hear things like that, that's usually a warning sign. It's like, what business do you have being in the stock market? Only the big boys should be in the stock market. It's like, and you're talking too much about it. And that's why I'm getting upset with President Trump and his talking about the market, because Herbert Hoover did the same thing in 1929. And I'm emailing him on his Twitter, President Trump, shut up about the stock market, please. So what happens is once they get enough people who are not sophisticated on board, the people who control the prices, mainly called specialists, on the New York Stock Exchange trading floor, the specialists figure, okay, let's drop the prices. And when they all do it at the same time, you can usually get people selling and into a panic mode. And usually, if you notice, most panics usually take place in fall to winter or spring to summer. And there's an actual study that shows people with bipolar disorder usually have their episodes of mania during these same times. When you have those change in the seasons, it usually
That's interesting.
it usually kicks off, from what I understand, it kicks off a part in the brain that just says that demands immediate relief or else. And that's why everyone's like cells at the same time, because you get that seasonal trigger that just people say, I gotta have relief now, and so everyone sells at the same time. And that's usually what kicks off a lot of panics. I mean, I think on record, I think there was like only 2 panics that took place in the winter and none in the summer. Because the sun is out, everyone's nice, everyone feels fine. But when you get that seasonal change, that's usually what kicks off things. So what happens is the big club gets you to sell everything back. I want to get rid of this, and they buy it all back from you at a cheap price, and they start the cycle all over again and start raising prices. They go, okay, I'm feeling good. The media says it's good. MSNBC, Rachel Maddow says it's great to invest or whatever, and you jump on board again, and they sucker you along again.
Well, and that's why I'm not buying real estate right now either. I think real estate's going to drop again.
It's possible.
I'm
Okay.
going to wait till it drops and then buy it.
And there is a lot of advertisement people telling you on TV how to make a fortune in real estate. That's a real serious clue to say, I think I should avoid that. Okay, now we're going to go look at the next chart. We're going to look at some examples. This is the Dow Jones Industrial Average from 1915 to 2019. We didn't have organizations that measured bullish consensus or bearish consensus back then. However, there were people who did their own estimates. September 1929, the estimated bullish consensus was 75% to 80%. It was September 1929, a 12-year-old boy went up to Joe Kennedy and offered him stock advice. I think it was U.S. Steel and General Electric. And Joe Kennedy was like, what is this kid doing in the stock market? And of course, he thought about it. He said, if this kid's in, that means there's no more buyers. So he shorted the stock market and created a family dynasty. So if you're like I said, if your person does your nails, tells you to buy Apple or something, you know there's something not right. Okay? Now, the drop. This is in dispute. My grandfather remembered the 1932 drop. He said he remembered it because it was 1932 and the stock market hit 32, the Dow Jones average. A lot of the averages say it hit 40. My grandfather says in May it hit 32, in 32. And the estimated bullish consensus at this time was less than 10%. And people were taking their stock certificates and pasting them on the walls in bathrooms at bus stations. And when the stock market started to climb past 100, it was reported that some of these people started nervously peeling those stock certificates off. And if they held on to them, they created their own little dynasties. Seriously. Okay? So now we go to 1987, Market Vane. Market Vane was a company that measured bullish consensus. I actually got a phone call from them once. They said, are you bullish or bearish? And of course, this was 87. I said I was bullish. Stupid. And in September 1987, right before the big stock market crash of October 1987, the estimated bullish consensus was 75%. And of course, we had the big crash of 1987. It resulted in a bullish consensus in November of 1987 of 15%. Again, a great time to buy. And you know what happened the next years after that? They had books out. There was one book out called The Panic of '89. There was another book called The Great Depression of 1990. And all these idiots were following this while the market, it's like I said, if you look at this, just look a few, it's like talk about dumb. People were believing this. So once again, how does the big club try to get you to sell back to them at a cheap price? They sucker you. They use the media. They use so-called experts touting logical advice. Oh no, this is what's going to happen because this and this and this. There's nothing logical about the stock market. Let's get over it. Come on. Okay? Then this comes back. Let's go to 2007 now. This is my favorite organization, AAII, the American Association of Independent Investors. Okay, and you can go online, just look up AAII Bullish Consensus, and you can get a bullish consensus reading right there for free. I love these people. So they were 69% in June of 2007, And of course, we had that big drop, and it dropped the bullish consensus dropped to 16% in February 2009. Okay, now let's go to the next page. This is an example of a recent application of the greed, buy, and fear sell signal. Okay, by the way, the election of Trump as U.S. president indication, I'm not trying to say that I like him or anything. I'm using that just as a time measurement.
We know you like him.
Yeah. Yeah, I like his ties. Anyway, if you look at this, you look at greed buy, the AAII percentage of bulls, that was 66%, and many of you who remembered my sessions, I said that in March through April of the 2018, I said that the market would go sideways, and if you look what happened. It did go sideways. And then, of course, it went back up, and then it did that incredible, phenomenal drop. And I was off by 1 week from the bottom. It was many of you who went to my seminar on December 16, 2018. I said it would be a great year for the stock market. So that little circle there, I'm not tooting my horn, but it was very, very close when I made that call. I said that 2019 would be a great year for the stock market. And so far, I'm pretty good. Okay? So, but look at the bullish consensus on that, 20%. I was hoping it would drop into the teens because that means the next move up would be really serious, but it didn't. So I'm like, it's probably going to be a mediocre move up at the best. Okay. So now that we know about market psychology,
So you're waiting for the score in the teens to invest so that you make a lot? Is that what you're talking about?
What do you mean?
You're waiting for a score that's not in the 20s but in the teens, right?
No, I'm gonna explain my strategy at the end. Okay. Meantime, let's look at some favorite astrology cycles used in the stock market. Bill Meridian's Mars Vesta trading cycle. Bill Meridian is a graduate of New York University. He has a bachelor's degree in finance, worked for Payne Weber, and he became an astrologer. And believe it or not, the cycle that's going on right now, the Jupiter square Neptune, was what turned him onto astrology. If you notice, he said he noticed that Jupiter square Neptune, when it happens, he says the price of gold jumps. And we've had a big jump in the price of gold, haven't we? Isn't that amazing? And so, and I didn't buy any calls on gold. Damn it. Anyway, Bill Meridian was one of his pet peeves was the 4-year cycle, because he said he heard that the Rothschilds had a 4-year stock market cycle, and there was also an article written by L. Dunbar in the 1952 issue. Did I say his name right? Yeah, L. Dunbar. In the 1952 issue of Barron's, he talked about a 3.83 year cycle. So one of the things about Bill Meridian, he wanted to find out what is the ultimate 4-year cycle, because he heard so many people who were successful in the stock market used it. So he figured with Mars is the energizer, and it has like a 2-year cycle almost to every planet, including the sun. So he figured, okay, we'll work with Mars, and he did a computer program that looked at every 4-year cycle that Mars had relative to other planets. And the cycle he came up with that was the most dominant was Mars relative to the asteroid Vesta. Now, what can you say about the asteroid Vesta? Who can tell me anything about Vesta? What does it represent?
Home and hearth.
Huh?
Home and hearth, yeah.
What sign do you think is strongly associated with?
Virgo.
Scorpio.
Oh, really? Wow.
Putin has it very strong on his chart, and J.P. Morgan had it conjunct his ascendant.
Wow.
So it's a very super duper Scorpio planet. Occultist Aleister Crowley had it exactly in between Mercury and Jupiter, which is writing. He wrote about Scorpio subject called the occult. So anyway. Well, I don't think it may have been Mercury Jupiter, but it may be 2 midpoints involving Mercury Jupiter. I apologize for that. So anyway, so we're going to go to the next page. This is the actual cycle, what his computer said. Okay, the last time, if you wanted to use the cycle, you would have bought it August 27th. Basically, it is the waning trine of Mars relative to the asteroid Vesta. That's the buy signal. And that would have been August 27th. And if you looked at your charts, the greed buy chart, the very, very beginning right here is about where you would have bought. So if you followed this cycle, you'd be doing very good right now.
My money's in the money market. I
Okay.
can't deal with the stock market.
Okay.
Me
It
too.
stresses me out.
Okay. So the next buy for this is October 22nd, 2023. And the reason why is we have a sell signal at the end of this month. July 31st, 2019 is the next sell signal for this. Okay? So unless the stock market does an outrageous crash, if you've been following this cycle, you made money for the past 3.93 years.
Wow.
Okay? Okay, the next page, this is the actual article by Bill Meridian. Bill Meridian, according to this cycle, he uses the 20th century for investing. It is 76% accurate. Had you used this cycle like you would have turned, where's the figure? $1,000 portfolio in the beginning, 1900 up to 2000. If you mechanically use this cycle, buy here, sell here, according to what I just showed you, $1,000 would have grown to $283,000.472. This is versus 117,000 for the buy where you just put 1,000 down and just let it grow and don't do anything. So this beats the buy and hold strategy by 2 to 1.
But you'd be dead.
Yeah.
Yeah, but
It's
you
100
have.
years.
Yeah, but you have. Yeah, but you have.
I'm rich, but I'm dead.
Yeah, right. But anyway, but I'm just saying. But the thing is, it's 76. According to this, it's 76% accurate. I went on a talk. I tried to find out the more recent figures, and the more recent figures indicates it's now 88% accurate. Because this goes up to 2000. So he's done very, very good.
Wow.
And like I said, I tried to get the figures to confirm that, and I couldn't. I'm sorry. But what I understood from a chat room was that it was 88% accurate now. And because of that, in 2016, Timers Digest named Bill Meridian Timer of the Year, which is a very high honor. And he is the first open astrologer to have this honor with this thing. Because the thing is, I've always read a lot of these stock market letters in the 1980s, and the thing was, I was always suspicious because they're like, you guys are following astrology, you just don't want to say it. And he was the first person to get up and say, yeah, I am following it. And the Timers Digest just basically let him have the award. And Timers Digest, if you want to be on their list, it's a 5-year waiting list. So this is a big honor to win that. Okay, now if you look at the graph, if y'all are looking at that graph, that yellow graph there, that's the actual computer study that he did to determine this. He did it with several planets. He said Mars Saturn was the second most accurate, as you would expect Mars Saturn to be. And but with this one, what I have circled were the one on top. It's the greatest deviation from 100%. And like I said, if you look at the top at 90 degrees, it's like 2%. And this is like every day of the stock market. He did a computer